All right, happy Friday, happy afternoon. It's MJ Stock Trader. I'm here with Dan from the Chart Guys. Trying to do this every so often, once a month, every 2 months, depending on kind of when the market dictates us kind of getting together. And it's been a good time lately in cannabis for the last couple of weeks. So how's it going, Dan? How's trading going?
It's good. Like you said, it's been a good couple of weeks. There's some major shifts going on that I'm excited to talk about and glad to be back.
Yeah, if you're out there, retweet this. We're doing this live only on Twitter. Eventually, Dan will have a version up on his YouTube if you need to watch it. But it should, hopefully, it stays on there. Twitter sometimes is hit or miss with the video stuff. But post a comment if we have time. We're gonna get Dan out of here by around 2:05. He's got something, so we're gonna get out about a 30-minute live feed. So we're gonna kind of cover what Dan likes to cover, which is overall market first, big picture down to the small picture. He always talks correlation. I think the Russell is a big correlation. Some are talking the SPY's been correlated. What are some catalyst headwinds? Because he's not a pure 100% technical trader. He does look at indicators that'll help his trading along, like we all should, I think. We'll go over MSOS, some LPs, and some select MSOs. But first, I want to take care of you, Dan. You're sharing. You're gracious with your time. I got a link. I watched the videos. I think Dan has like 10 intro videos, and then he has a service. So just tell me about what your service is about. People who out there might not.
Yeah, so we got the YouTube channel, which is just at this point, 8,000 videos over the last 6 years of just free content. But we also have the more in-depth stuff where we've got the Slack chat room community, and we do multiple live streams every day, and we've got courses and things like that. So we put out the basic intro to technical analysis for free on the YouTube, and then for those that want to dive more in depth, we've got other free daily market rundown videos. And I talk about the sector often in those. But then those who want even more, we have our chat room community that is available on our site, TheChartGuys.com.
Yeah, check out. He has a nice playlist. I linked to that in this Twitter. Give it a look. It's great. I went through the videos. I think it was like 10 videos. It gives you really the basics of technical analysis. If you like it, you can sign up for his course. All right, so I'll pull up the charts, I guess, and I guess we're going to start with the overall markets.
Yeah, let's do it. So SPY. So right now I am watching the weekly time frame, and we're watching for a lower high to be the result of this bounce. We have the all-time high, we have the low of our fear dump, and now we're watching for a lower high because after we have significant periods of volatility, we usually look for tightening ranges to form. And the daily time frame, the two levels that I care most about, you can see we've been trading fairly sideways, and actually the bears are taking over a bit right now. We're heading right down to this key support. If that level breaks, we confirm a daily downtrend, and that would be obviously a bit bearish if that were to happen. We're in a daily uptrend. We rejected from resistance. We had CPI numbers that came out on Thursday. We rejected from resistance, and now here we are testing support. And if we roll over here and break this support, it's our weekly lower high being set. And then it's up to the bulls to hold the fear lows. And I'm going to be talking about these fear lows a lot because it's critical, in my opinion, that they hold. For me, just visualizing it, that's the safety net where, yeah, okay, we're not that strong. We're bouncing around in price discovery mode. But if that safety net falls, we see another rush of fear enter the markets. And obviously, it doesn't matter what sector you are in. If there is a wave of fear hitting the markets, everybody is going to take a hit. Now, the cannabis space has been holding on extremely well comparative to the broader market this past week or two, but fresh fear lows would significantly change that.
Yeah, we had some people who are not following the sector as closely as maybe me and Dan are. Schumer actually sent a letter to his Senate colleagues asking for some final feedback. People anticipating, by April, 420, we're going to get his legislation out there, and that's why we kind of been holding up pretty well. But who do you think? What do you say we're correlating the most with? It's usually been the Russell 500, right?
It is the Russell, and you can see the Russell right now is stronger than the S&P 500. The S&P 500, if we're just looking at it, is at the moment approaching its low of February 4th. And if we look at the Russell, the low of February 4th is still way down here, and we are multiple percent above it. And that has been a notable shift. So I talk about correlations for those that have been following me constantly. And I'm always watching, where is money shifting to? Who's stronger? Who's weaker? Who's got an inverse correlation? Who's got a direct correlation? And one thing that's been standing out in this sector since the all-time highs, the last, what's it been, almost a year at this point, it's been a bearish correlation. And anybody that's been invested in the sector knows that, because you look at the broader market and you say, oh, it's green. And you look at the sector, oh, it's red. No matter what happened, the sector would just go down. That's a bearish correlation. But that has shifted the last 2 weeks. And it's been very notable for me because I'm watching for it on a daily basis. And during the drop, it would happen, every so often, one day, cannabis would stand out with a bullish correlation of the market. And I'd say, okay, time to pay attention. It's only one day, but we need to be watching. But over the last 2 weeks, I would say 50% of the trading days, it has happened. And again, it's very notable to me, specifically the last 2 days, what I have been doing. And I want to talk about hedging, because a lot of people only go long the sector and they leave themselves vulnerable to any downside in the market. So what I've been doing the past couple of weeks, I put out a video over the weekend where I talked about how I currently, at the end of last week, was in my largest USMJ exposure that I've been in since this bounce back in November, which puttered out and didn't get much follow through. But the reason that I've been back in this move is because of the correlations. So what I do is I short QQQ. I am short the NASDAQ because the NASDAQ is even weaker. The NASDAQ right now is just broke daily support while we're talking here. So we just confirmed a daily downtrend in the NASDAQ, and it is clearly much weaker. We just broke the low of February 4th. So what's happened the past 2 days is my long USMJ positions have been green, and my hedge short QQQ position has been green as well, which is an ideal scenario because both opposing directions are going up at the same time. So that's one thing that I'm focusing on is, okay, I want protection. If the market goes down, I want to be able to have my account withstand. I don't like account drawdowns. And so I want to protect against that. And I've been doing so with SQQQ, which is a leveraged ETF for QQQ weakness.
Yeah, and there's even another version that's even like triple the SQQ, right? So you can actually go like over leverage if you want.
That is what SQQQ is. So yeah,
is that what it is? That's the triple. Okay.
Yeah, I just use smaller capital, and it goes a further way. Another thing I want to talk about is IIPR. I mentioned this as well, but IIPR versus MSOS. So when you have a chart on TradingView like this and you put one ticker / the second ticker, it tells you relative strength. Where would my money be better off is in terms of those two names. And we could see that your money was better off in IIPR for a very long time, for almost a year at this point. And over the last year, since this year started, the last 5 weeks, that has changed. And right now we're at a point where MSOS is the strongest it's been comparative to IIPR, relatively speaking, in the last 4 months or so. So it's just a notable shift. And I do the same thing here with MOS divided by QQQ. Again, I'm watching who's stronger, MSOS or QQQ. Ever since our all-time high in MSOS, the NASDAQ has been significantly outperforming, but there's a very notable shift that's gone on over the last 2 weeks. And again, that's just a chart that I use to help me visualize, where do I want my bull money and where do I want my bear money? And over the last week, having QQQ short and MJ long has been the trade to be in my opinion.
And it looks like the RSI is pretty overbought right now, right?
It's getting up there. Definitely. One thing I do is I look back historically and I can say, okay, back at all-time highs, it was higher, but we're going to be due for a pullback here, definitely sooner rather than later. But if we're looking at MSOS chart itself, you can see daily consolidation is shaping up. So again, we're holding on better than the broader market, but we're not immune to the broader market. The big upper wicks on these last 2 days show us, we had a great start to the morning. The bulls were in full control, but then broader market weakness the second half of the day dragged things down a good bit. So yes, we are holding on better than SPY. We're holding on better than the NASDAQ, but because they're going down, we're going down a bit as well. So we're going to anticipate that MSOS is likely due for some daily consolidation. But the good news is the bulls have tons of space to work with to form a higher low, anything above 2090. So the goal for the bulls is to maintain a daily uptrend as long as possible. And we're going to anticipate a daily higher low is going to be the most likely result of the next period of consolidation that we see.
Yeah, if I could, a couple of things. So one, Dan went over IIPR. If you don't not familiar with them, they're a real estate investment trust. They're kind of they're kind of like a contrarian indicator for safe banking, right? Because they give out the loans, they basically buy back these properties from these cannabis companies, give them liquidity, and then they build out their facility and they get these high rents, right? So with safe banking, that could be a bad business model. So you notice that IRPR has been heading down as some of the MSOS is going up. MSO has been going up, and that's one of the main reasons why I think a lot of people track IIPR. And if people don't know, I I think it was February 1st, they put out like a big debt offering. And on February 4th, they canceled that debt offering. And a lot of people kind of looked at that. And I know you're going to get into it, but CGC or WEED, WEED, Canopy Growth, they come out with most people who look at fundamentals were pretty terrible earnings, but Dan doesn't care about that, right? You just care about what did it do to the stocks. And you want to cover them first on the LPs, or what do you want to do?
Yeah, let's do that. So again, a nice shift is underway. We're in a daily uptrend where we established a base of support and it was a bullish reaction to earnings. And again, a lot of people look at the earnings. So where traders go wrong, in my opinion, when they're only focused on fundamentals, is you look at numbers and say, is this good or bad? But that's really a tunnel focus because you're not looking at the bigger picture to say, well, we've been absolutely crushed for an entire year. So that's important because you have a balance. It's always a balancing act of supply and demand of shares. And there's been an excess of supply of shares for the last year. And you get to a point where there's just bear exhaustion, where everybody that's going to go short has gone short. Everybody that's going to exit their long positions has done so. And you get to a point where it really doesn't matter what the numbers are. You're going to see that imbalance shift a bit and say, well, okay, if there's nobody left to short down here and there's no longs left to sell, that's when demand starts to exceed supply a little bit. And then that forces some shorts to start covering. So with the daily uptrend, it's a nice start to a shift. But when you're in a prolonged downtrend, when you're in a monthly, weekly, daily downtrend, when you change one time frame's trend, you change the daily trend to an uptrend, all it means is zoom out to the weekly and you scout a weekly lower high. Okay, well, anything on this bounce under 1596 is just a weekly lower high. And if you're going to see a longer term momentum shift, you then have to change that weekly trend with a higher low and higher high. Then if you do, you zoom out to the monthly and you know you're just going to be looking for a monthly lower high. So it's such a long, slow road to change when you're in a prolonged downtrend, one time frame at a time. You know, if we're going to change the weekly trend from here, it may take another 5 weeks for that to shape up. So it's definitely one step at a time, one baby step at a time. We can look at this and say, okay, well, this is the best bounce that we've seen since that November bounce. And we're going to be comparing it to that November bounce constantly. And we can see one major difference is the November bounce for both US and Canadian MJ was just a straight shot up. It was a little mini short squeeze and there wasn't any follow through to it because we never changed the daily trend. Again, we never had that higher low and higher high that is needed to just keep pressure on shorts essentially. And this time around, it's a little bit different because we are building supports on the way up. And you can see that if that were to continue, that again, what I'm looking for on this move is how much space is being created for the weekly higher low attempt. And we can look at that as a percentage and say, okay, well, at this point, we could pull back 25% and still just be looking for a weekly higher low compared to 664. So bulls are doing a good job of creating that space. The question will be into the end of February and into March is, can we establish a weekly higher low? Because last time we just fell right through it, lower low, but we need that higher low once we top out on this move.
Yeah, since February 10th, which is we hit the anniversary last year, it has just been stair step down, right? All the way until, you know, pretty much on almost every stock. There's a few, like I pointed out, Glass House this year is up like 70%, but it got hammered. And it's clear. Look at Dan's charts and people understand it. It's stair step up and it's stair step down. People who see when you see I've been telling people I've been taking some profits the last couple of days because when MSOS is up 30% or 22% and hasn't pulled back at all, and the market's kind of pulling the gravity downwards a little bit, you got to take a little risk off the table if you can. We were talking before this. It sucks if you're red pretty much deep from last year and there's no profits to be taken, but that's one of the rules is like, I think you probably live by is always have cash, right? You always want to have, I have cash for the worst part of the market that could happen. Yeah, go ahead and continue.
So, I mean, right now, as we're speaking, markets are getting pretty ugly here. We can see QQQ just rolled over with a big flush into the low of the day. Like I said, we just confirmed a daily downtrend, and the S&P 500 is now confirming a daily downtrend. So this is a red flag for me. And like I said, right now, I have an SQQ position that is offsetting things. Because right now, I have my holdings. I've seen enough correlation favoring the USMJ bulls that the position sizes that I have I'm counting them as my core, and I want to keep them. I don't want to be selling and then try and rebuy. I'm just keeping those. So I don't have to worry about, managing and flipping around. But again, I'm constantly protecting. So right now I can see that my MSOS position is down from where it was a couple hours ago, but my SQQQ position is offsetting that. and it's going up notably. So again, it's taking profit or taking some position off is one way to do it. But if you don't want to do that, another way to do it is by opening bearish positions. And it's definitely a little bit more advanced as far as trading is concerned. But again, learning how to hedge is very important to be able to withstand significant drawdowns if you are in a buy and hold mindset looking longer term.
And you have to look at, you have to look at the data ahead of you. And there's been reports that the FOMC is going to do a special meeting like Monday, I've seen. That's been off or on. We know there's interest rates coming up. So there's this big picture stuff too, I think you look at as well, right? Heading into, so you look at the chart, like I think we talked, you said you're 80-20 technical, that 20% is looking for key indicators. Like, to me, it was kind of obvious potentially today we might see a sell-off just because I've heard of a potential meeting on Monday or next week. And you usually see when we had the hawkish FOMC just a few weeks ago, and they really pounded the market after that, right? Got a little bit of hawkish. And those inflation numbers yesterday were just like brutal, right? It was like 7.25% in the CPI. So these are things you're looking at too, right? I think heading into just technical standpoint.
Yeah, I'm not as concerned. Like, the FOMC, I never listen to a word they say, but I'm aware of the events to know, okay, we're going to see volatility at this time on this day. So I know CPI 8:30 a.m. on Thursday, we're going to see volatility. And again, for me personally, I'm not reading anything that they're putting out. I'm just watching the charts, and I'm making all of my decisions based off how we're reacting. Because oftentimes you would think, like same thing with CGC, why are we going up when the numbers weren't good? There's a lot more in play in markets and the internals of how markets work than just, is it a good thing or a bad thing as far as, the news that came out.
All right, so we got about 15 minutes if you want to cover any more LPs and MSOs.
Yeah, let's go. So TCNNF, one thing I want to point out is the dollar volume, and for MSOS as well. I mean, the dollar volume is really picking up very significantly in the last 3 months. And you can see this orange line here is the 20-day average volume. And once that little mini short squeeze took place back in November, it's just been a wall of dollar volume, which is a good thing because volume oftentimes marks longer term tops and bottoms. And we can see, the volume climax up at the all-time high was definitely an indication. And while the volume very high in November didn't mark our bottom, it's a good sign to have this much volume going on. If we were seeing tiny volume and no interest, we would have to be cautious of just continued slow bleed. But obviously there's a lot of trading going on in these last 3 months and a lot of positioning for people that are looking for a longer term cycle shift. And the biggest factor, I've seen enough, like I said, the last 2 weeks that I am paying very close attention to the cycle shift. And the one thing that's going to make me give up on this cycle shift is if this broader market rolls over. And again, today, just losing these daily supports, it's making me a little bit more concerned. Absolutely that, okay, well, we might not see that, if these fear lows break, if we break the lows of the end of January in our major markets, I'm going to have way less confidence in the USMJ sector in the short term, as many other people will as well. So we really need to hold these lows that are going to be in play next week, it looks like. And so MSOS dollar volume very high, but TCNNF as well, where, the dollar volume yesterday was over 20 million. And we just want to see continued high volume. We know that once Canopy, CGC started putting in, they uplisted however long ago, and the dollar volume just exploded as there was just so much more trading activity that was going on. And that's something that people are really looking forward to in the USMJ space. Once we get off the OTC, once we do uplist, that dollar volume increasing. But long story short is higher volume is always a good thing unless, we're dumping on higher volume. But if we're trying to establish a longer term shift, seeing that high volume is a good sign. So truly,
if I can just clarify, so that when you get all this money coming in at these levels, it just means people have a nice cost basis at these levels, as opposed to not too many people like owning at these levels, and because there's not a lot of selling. So that spike in volume for the last couple of weeks means you have a nice cost basis around these price levels. That kind of good interpretation.
Yeah, it's establishing a base, right? So the safety net that I talk about in the broader market was very brief. We hit it and then bounced fairly quickly. But some of these names are trying to build a key base of support. And actually, True Relief had one, and it fell through it. And we had a lot of bear follow through. We had this triple bottom at 23, and that was really a key level. And you can see how important it was, because once that safety net falls, we dumped over less than 2 weeks. We then dropped 23%. So what I'm looking at on VRNOF. Again, I talk in tickers, but
Yeah, that's Verano.
It's the base in it's the base at $10, and it's the same thing. We're holding it real well.
We talked about that. It's hit 10, I think 5 times and bounced off it to close to 12 each time. So it's been something I've been trading. I've been trading Verano quite a bit because every time it hits 10, I load up, and when it gets over 12, I've been selling a big chunk of it, if not all of it.
Yeah, it doesn't get much easier than that than trading, as far as just, okay, a clear level, it gets close to that, I buy. If it breaks, I exit and stop out with a small loss. And if it holds it, the reward is going to be significantly more than the risk. But that level is very key, because as we saw, if TrueLeaf can dump down 23% in less than 2 weeks when its key support level breaks, this is a must-hold level. And I have a long-term position on VRNOF that is based on that level. I will bail and have no problem bailing if 986 were to break. But as long as that level holds, I am interested in making plays off of that level. And we can see on the weekly time frame here, this is a constricting range, and we're going to see a volume and volatility spike here in Verano. I can't say exactly when, but I can estimate that probably sometime end of March or early April. That's just an estimation, but we've got that high, we've got a lower high. And if on this current bounce, if we do not break 1394, it's just going to be another lower high, and we're just going to get tighter and tighter. And it's just, imagine stretching a rubber band, and eventually it's going to break, and it's going to break one way or the other. We're either going to fall through that support level and drop 20% potentially fairly easily, or we're going to break those lower highs and shoot up 20% very easily. So I'm watching this constricting range very closely over the next month plus.
All right.
I'm just keep checking in on things rolling over here. It's getting ugly. It's a solid drop in the broader market. And you can see MSOS, which started the day real strong, it's rolling over with it. So again, we are not going to be immune to broader market weakness. And here we are testing that low of yesterday, and daily consolidation is on the verge of taking place. For those looking for entries, again, we're watching the broader market, because if that safety net breaks, it's all bets are off. But I'm going to be watching for hourly oversold conditions. So when the hourly RSI drops under 30 and we are scouting a daily higher low is the most likely scenario, which we are due to the size of the bull move that we've seen, then that's when I start looking for an entry. So for bulls that say, oh man, I missed this run and I don't want to chase, keep an eye out for hourly oversold conditions and watching to potentially establish an entry in those conditions. And one thing that I like to do is generally when you see hourly oversold conditions happening after a solid bull move, you'll get some kind of bounce, even if it's just a short-term bounce. Say we have a red day Monday and we drop down to hourly oversold. I will enter a position in hourly oversold conditions and I'll sell a bit of it into that bounce, so that even if it is just a lower high that continues dropping, my cost basis is favorable because I take a little bit of profit. Let's say I enter half at 23 and I sell half at 23.50. Just like that, my break even is 22.50, and it just makes me that much more comfortable. But that's one of my major trading styles when I'm trying to establish a position based on a longer term time frame to ensure that I'm staying in control of the trade.
Yeah, I want to talk a few points because it's key that you bring up, and I think it's how you've been a very safe. It's all about putting yourself in the best probability, right? So you're giving yourself the best chance. When you see a buy point, you're also putting in your stop loss point and your sell point, right?
Definitely.
So you're mitigating your risk. You have a target based on your chart and your history of where people start selling it. And when you get there, you can either sell at that point or you can bring up your stop loss to up higher, right?
Yeah, I love being break even risk free, where my stop loss, I sell partial and then I put my stop loss where my break even is. I've done that a lot more the last couple of years, and it's just, talk about not having any stress when you just set that order and I have nothing to worry about. I can't lose. That is the way to do it. Now, and again, as you said, I just want to point out for people that there's a lot of skeptics of technical analysis out there, and I certainly understand it. But the major misconception is that people think that people use technical analysis to predict. And the people that do that are using it wrong. It's not predicting. You're determining where the probabilities are, and you're positioning yourself for low risk, high reward scenarios. So there are many times I'll enter a trade and I'll set my stop and it'll work out. And I'll say, well, I couldn't possibly have guessed that it would have gone this well, but I positioned myself to benefit in case it did. And if it didn't, I would have had a small loss and stopped out.
Now, when you do a stop loss, you put a limit or a market?
I will usually do a market. That's the one thing about these OTC names is I can't even use a stop loss on Fidelity with these OTC tickers. So I have to do OTC manually, which is okay because I'm at the computer every day anyway, trading. But I will use market because if I'm trading something, it's liquid enough where it's, it's not going to matter whether it's limit or market. So I'll just, if the levels hit, just stop me out market order.
Yeah, that's key. And I think that's what I want to let people know. Dan's rubbed off on me with these kind of when we talk each time. And it's kind of like if you go to Vegas, go to the roulette wheel, you put everything on red. You're giving yourself about a 49% chance, 48% chance. Dan's trying to give himself like a 70, 80% chance based on indicators. If it doesn't work out, he mitigates his risk to like 5% or 10% or something like that, right? Is that kind of accurate?
As much as if you walk into a casino and you've got your $1,000 in your pocket and you don't have any bank cards, that is worst case scenario. You lose that $1,000. So every time I enter a trade and place a stop loss, I already know the worst case scenario, I will have this much money in my account. And if you go into that casino and you got your debit card and that's when you're averaging down and you don't have a plan and you're adding and it keeps dropping, that's when things can get really ugly. So again, it's just having a plan, having a plan for every scenario.
And it's pretty much been given a guarantee we're going to see rate hikes this year. Does that change your style going into, something like that? Do you look at different stocks, or do you kind of like, what does it change for you when we're going to get, like, they're talking about, 4 or so interest rate hikes over the next like 6 months?
Honestly, it hasn't impacted things because, if you take my fundamental brain and say, okay, what do you do with that information? I would be expecting right now that growth stocks would be getting hit harder right now. And they're not. The last 2 weeks, growth stocks have been outperforming big tech. And so again, I'm aware that is happening, and I'm aware that the market is reacting, and that's why we're in high volatility. But it's just the day-to-day observations that I'm basing things off of. And I could never have anticipated that short QQQ and long USMJ would have been the play 2 weeks ago. It's just from observing. And again, no fundamental observations, just everything on the chart and just watching these little flashing numbers on a daily basis, putting in a significant amount of time making those observations. But really, I'm aware of the fundamental backdrop, but it doesn't really influence my decisions a whole lot.
All right, we'll get one closeout here. Can I throw one stock at you and we get a quick analysis on it?
Let's do it.
Let's do Facebook, FB.
So I just traded Facebook. So obviously the earnings, big time dump, and it took a while to find a bottom even after that. We were just in slow bleed mode. And we finally started that bounce on, Wednesday. And so I wanted a position. And what I did was, here's a good example, and then I'll go into the bigger picture analysis. But let's see what day, Wednesday. So what I did is I wanted to put myself in a position with low risk, high reward. So I see this morning move, and this move broke the high of Tuesday. So I say, okay, the daily bounce is underway. We took out that lower high because before that, every single day, lower high, lower high, lower high. So, okay, that's a start. I don't want to chase though, so I'm patient. I'm just watching it. We pull back and we bounce off 224.12. Then there's a lower high, and it's just a tightening, constricting sideways range. We broke 224.12 with zero follow through. We broke it by 12 cents. Okay, that gets my attention. A bear break with zero follow through. That shows me bulls are buying that dip and defending that support. So we came down one more time to test 224. This is where I bought. I bought, let's say, 224.70. I put my stop under 224. So I'm literally risking 80 cents. And what's my reward? Again, I didn't have a target. I couldn't look at this and say, we're going up to 233 today. But I positioned myself with 80 cent risk, and I held that position into the close and ended up with $8 of reward. So my reward was 10 times what my possible risk was. And I did just exit that position today once the low of yesterday broke, because what that tells me is our top of the bounce has been set. And this to me looks like a bear flag. And when I'm gauging if something is a bear flag, I look at retracements, fib retracements. So from the high where we came from to the low of this move, I can see this bounce was extremely weak. We retraced, 15, 20% of the drop. So that tells me a bear flag is on the table, and a bear flag is a pattern that favors bearish continuation. So again, it's all about higher lows and lower highs. So if we're setting a higher low each day, I'm holding my position. As soon as that pattern breaks, I'm out of that position, and now I'm just back to observing. So really, it all depends on this bottom of 216 And if it breaks, the daily downtrend continues and we're back in free fall mode. And that's pretty much what we're watching first thing next week. Can 216 hold or not? And a simple statement is, if 235 is resistance, the bears are very comfortable because that's now our new daily lower high level.
Yeah, I want Facebook at 200. Am I going to get that?
It's possible for sure. I mean, if QQQ and if SPY roll over and head to our fear lows, Facebook can get ugly. We're in an area where there is a lack of support. 207 is a level that stands out to me back here. But 216 first. It's all about 216 to start next week.
All right. It's almost 2 o'clock. If you want to end with anything, we'll get you out of here, get back to trading.
Yeah, just put in some effort. The information and content is out there, and I've been putting out some more MJ videos, and I'm certainly not the only source. I'm definitely one of the better MJ technical analysis sources out there, if I can toot my own horn. But again, a melding mesh of fundamentals and technicals, and have a firm understanding of technicals to establish trade game plans around and not just be at the mercy of the market. There's nothing worse than being a leaf blowing in the wind where whatever the market does is whatever my account's going to do. That's a lack of control that I just can't stand for. I'm in control of my financial destiny and I'm making the decisions.
Yeah, so check out Dan. I got the link in there to Dan's watch playlist. Take a look at it. It's some basics, and if you like it, you can sign up for his course. I highly recommend checking it out. And Dan's always great on Twitter. If you see him putting stuff on US MJ, go ahead and retweet that out. Let's get more information out there for the sector. All right, thanks, Dan. We'll see you again in about a month or so.
Appreciate you, Mike.
All right, man. Take care.